In this video, I will show you 4 common mistakes that will hurt your returns and how you can avoid it. I wish I knew them before. My name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 24% annual returns. And I did these mistakes. So let's learn out of my mistakes so we can improve and become better investors. And let's get straight to the point. The first mistake is to let emotions reign in your decision making, because the stock market can be scary. I'm telling you, this can be scary. Stocks can go down very rapidly before going back up very slowly and then going down again. That can be a mess. That can be stressful. You can be worried if you are checking the news every day, if you are checking Twitter, the TV, the doomsayers that say that the apocalypse will come. I'm telling you, every year you will have market experts that will say that we will have a crash. We will have a stock market crash. This is expected and this is obvious, and for this and this and these reasons. These experts sound very smart, but these experts don't make money because most of the time the stock market is going up. So believe in the process and don't let your emotions come to affect your judgment. That's a major mistake that I see in the stock market, especially for beginners. They stress about it. The second mistake is linked to this one. This is focusing on the short term. If you focus on the short term, you will pay more transaction fees because you will stress about your stock. You will panic sell, and this is very bad for your long-term results. If you focus on the short term, you will not sleep at night. You will. That's why it's linked to emotions. You will panic over what will happen next week because the Fed will talk and it will have an impact on the stock market, on the interest rates, inflation. Don't focus on the short term. Don't focus on the short term. Don't focus on the macro. You have a famous quote from Peter Lynch saying that it's pointless to think about the macro, and if you spend 14 minutes thinking about macro, you have lost 13 minutes. So literally, don't think about macro, especially in the short term. Anything can happen in the short term, but you are a subscriber of this channel and I teach you how to invest properly for the long term, like Warren Buffett. So we don't have the results of Warren Buffett, but I'm learning from his principles, and I wish you learn from these principles because they work. And what does Warren Buffett say? Don't invest for the short term. Don't trade over 3 weeks, 1 month, 2 months. When you buy a stock, you can commit to at least 1 year, 2 years, 3 years. I have this motto of only buying something if I can lock the position for 3 years. And most of the time, my holding position is more than 3 years. It's in the 5 years, 6 years. I have bought my first Apple stock in 2018. So yeah, it's been 6 years. So far, so good. I wish I bought more. So yeah, the second mistake, obviously, is to focus on the short term. This is very painful. This is how you panic buy. This is how you panic sell. So, and a lot of investors focus on the short term. And the more you are on the news, the more you can panic. The more you let your emotions come, affect your judgment, and do dumb stuff, dumb buys, dumb sells in the short term. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of this video. Now, the next mistake that I see a lot of people do is to invest in companies, invest in the stock because you like the story, you like the CEO. Yes, I'm talking about Elon Musk. You like the CEO, you like the story, you like the investor base, you think it will be the future. But at the end of the day, you don't really know what the company is about. Because if I tell you to pitch Tesla, maybe some of you will talk about the cars. Maybe some of you will talk about the robo-taxis. Maybe some of you will talk about AI. Maybe some of you will talk about vertical integration of all the process in Tesla. This is a complex business. The EV industry is a complex industry. So if you avoid these complex industries and you focus only on the simple industries that sell, beverage companies, Coca-Cola, Monster Beverage, Celsius, these kind of boring industries, garbage management, waste management, or the funeral industry, these are boring industries that make a lot of money. So my advice for you is to only stick to the companies you understand very well. Everybody has a circle of competence. Stay inside your circle of competence. This is where you are an expert. If you have been a golf player for 20 years, you know more about the golfing industry. You know more than 99% of people. So you know the kind of, I don't know, the price of going to a golf, all the equipment, you know how it works, you know what to buy, you know if this is a recurring business model or it's an upfront payment, you know the community over there, you can have testimonials, you can have feedback. So don't invest in software, only invest in golfing industry. If you have been a software engineer for 20 years, you know more about the software industry than 99% of people. So you know more. Stay in your lane, stay in your circle of competence. That is how you make most money. Literally all your money will come from that. And that is most importantly how you avoid mistake. How you avoid all the mistakes, all the traps. Because I'm telling you, a lot of beginners invest in a stock because it's sexy, because it's a lot of growth story. The CEO is charismatic, but at the end of the day, they don't really understand what they do. This is just because they liked the numbers, but once things turn sour and the company is declining, they don't know why, and they don't know if the business will pick up. They don't know if the growth will continue. So literally invest in businesses that you understand. So I would say stay in your circle, inside your circle of competence. This is very, very important. And the last mistake for you in this video is to focus on risk management. This is what I tell my students. By the way, I have a coaching program. This is the first link in the description. If you want to get some help with your investing, with your stock portfolio, and get the best deals for the long term, just you can check the first link in the description. You can apply this is very clear, and you have all the information you need. The risk management when you invest in the stock market is really important. In other words, don't put all your eggs in one basket. Don't buy one stock, even if that's your own company. Don't bet on 300 stocks because that's too much diversification. And if you have a portfolio of 300 stocks, you can't monitor 300 companies. That's too much work and you will get lost. But I would say risk management and portfolio allocation. Take a portfolio of 10 stocks, 15 stocks, up to 30 stocks. But don't go higher, more stocks than 30 stocks in your portfolio, because this is where you lose focus. And you have this image from Warren Buffett that you only have 20 decisions to make, investment decisions to make. He talks about 20 punch card, like a 20 points punch card. Think in terms of punch cards. Think like as if you had 20 investment decisions to make over your lifetime. If you have only 20 decisions to make, you will be very picky and only invest in the best companies where you are very sure of the future prospects, of the growth, of the profitability for the next 3 years, 5 years. I'm sure that if you have only 20 slots, you won't bet on a speculative on a speculative company in Austria, in Korea, in Japan, just because you like the story, you like the numbers. You will be very secure, very confident, and only invest in your best opportunities at the moment at the best price. You will be greedy, you will wait for a good price, but you will reduce the number of mistakes you do. And if you only focus on these kind of opportunities, that is how you will make money for the long term. This is exactly how you make money in the long term. You avoid the mistakes and you grow nicely up and to the right. So yeah, I would say the fourth mistake is not understanding risk management. So if you only invest in good companies inside your circle of competence with a good risk management, you don't focus on the short term, you don't let your emotions affect your judgment, so you are rational with a clear process, you will avoid all the traps because you are smart. You are smart. Literally, you are one of the smartest investors. If you check all these boxes, emotions, short-term, circle of competence, risk management, you will avoid 99% of all the mistakes, all the traps. You will focus on the best opportunities for the long term. This is how you make money. This is how you generate 20% per year. This is how I did it, and I generated 24% annual returns over the past 7 years. So literally, this is a clear process, And the goal is not to make as much money as possible, is to avoid all the traps and to stay in the game. The goal is to avoid as many mistakes as possible, because if you fall into a trap and you lose 70% of your money, it's as if you lost everything. I mean, losing 75% of a stock because you didn't do the due diligence, because you didn't know the business, that is a mess, and that's painful, and you will lose your sleep at night if you lose all your investments like this. If you like this content, I have an investing coaching program to make you a better investor. In this coaching program, you will learn a complete investing process. You will learn how to find stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. So what comes with the coaching program? You will get access to an exclusive community of like-minded investors, and you will get my personal guidance to help you build the portfolio of your dream so that you can have long-term results with your stock portfolio. Click the first link in the description to get more information. You will get a 10-minute video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.